Hello, so in today's video I'll be evaluating UnitedHealth, UNH, and determine whether it is a good buy at its current price. So for those of you who don't know about the current UnitedHealth stock situation, basically, the stock price has decreased over the past few months to from 600 to about 300. So that's a huge 50% drop. And at this value of 300, I'll be looking at whether this is a buy opportunity or whether I think UNH stock price would drop further. So firstly, I'll evaluate UNH through three things. First, I will evaluate whether I think it's a great company to buy. Secondly, even if it's a great company, the price could be overvalued, so I will determine the fair value of UNH. And lastly, I will be evaluating the current uncertainty regarding the situation of UNH. So let me jump to the first thing, whether I personally think UNH is a good company to buy. So the first thing I will do is evaluate UnitedHealth through its financials. Through that, I'll be looking at three things. In order to be a great company, first I'll have to ensure that over the past 5 years there is increasing revenue, consistently increasing revenue. Second, consistently increasing net income. And thirdly, consistently increasing operating profits. So these are the three main things that I use the financials to determine whether a company is great. So if I look at the revenue, I could see from Yahoo Finance that UNH has consistently increasing revenue. So you can see how the revenue increased from 2021 all the way to 2025, like trailing 12 months. So that's a good sign. Next, I can go down to the net income. And I can see here that UNH roughly consistently increasing net income as well. So that's another positive sign. And remember, the last and the most important one is the cash flow. I want to see that it is continuously increasing. So if you look here, the trend is increasing. It's not clear cut. If you want a better trend, you could plot it out in a graph. So I can go to our website that shows the graph of the operating cash flow. And we can see here that over the past 5 or 10 years, the general trend is an uptrend. So it shows continuously increasing revenue, income, and cash flow. The next thing I would like to look at is the gross profit margin or the net profit margin. I want it to be at least consistent or increasing with no major signs, no major warning signs. So if I go to this site, I can see that the gross margin generally is consistent, but there are warning signs, especially in the later years. Now you can see it's slightly decreasing. This is not a good sign, but currently it is still the overall trend is currently flat. But I'll be keeping a close eye on future years or quarters to see whether this gross margin decreases further. Because what this gross margin means is that it determines the profitability of the company, and if it decreases more, that means the company is less profitable, and we'll see what's the reason behind this later on. So besides strong financials, I also like to look more generically as whether UNH has a strong moat. And I know personally that UNH is one of the largest health insurers in the UK. It's a big brand, it's a strong brand, so that's a good sign of strong moat. Why this is important is because if you are big, you have price advantage in terms of dealing with suppliers, and also you can save in terms of cost savings as well due to your sheer size. So point number one, is UNH a great company? Yes. So let's move on to point number two on what is the fair value of UNH here. So if you have watched my previous videos, you would have known that no matter how great the company is, if you are overpaying for it, then that's not great. Because let's say you have a pair of shoes. It's a great pair of shoes, but For $100, it might be worth it, but for $1,000, it might not be worth it. So we want to do the same thing for companies. We don't want to be overpaying for the companies. So to calculate what is the fair value of the company, are we using this discounted cash flow model? So in this calculator here, I'll be entering values for operating cash flow, I'll be entering values on debt, and so on. So all these white boxes here, and this would basically spit out the intrinsic share price of UNH. So how do I get these values? Firstly, I can easily populate it using Yahoo Finance. So Yahoo Finance, I can go there, I get the operating cash flow, I can get the total debt from the balance sheet, and then get the cash and short-term investments again from the balance sheet. To get the cash flow growth rate, there are two sites that I really love to use. One is Zax.com, another is Finviz. And we can see that on both of these sites, it gives differing values. So what a normal person can do is that you can just take the average between two values to get the EPS growth rate for 1 to 5 years. However, I'm a more conservative kind of person, so I basically took the lower amount. The 6 to 10 years is basically just half of the 1 to 5, and the 10 to 20 years cash flow growth rate is basically, I'll just take half of 6 to 10. Next, the number of shares outstanding. I can go back to Finviz to get the value and the beta as well. For the risk-free rate and market risk premium, you can basically just get it from Google. They should have it. And these two values essentially calculates the discount rate. And I can see that after entering all of these values, it spits out an intrinsic value of 400. And currently, the share price of UNH is around 300, so it's trading at a 25, almost approximately 25% discount. So that's a huge discount. But again, so this calculator spits out the intrinsic value, and you can see that there is a huge discount. But again, this discount might or might not be justified based on the problems that UNH is dealing with currently. So now, thirdly, I'll be going through the main issues on why UNH price have dropped 50% over the past month, and whether it's justified and whether we should be concerned that it could drop further. So first and foremost, it's the higher healthcare costs. So if we read articles about it, we can see that UNH has been dropping profitability over the past few quarters and years, and we can also see that in the gross profit chart we have seen earlier. So personally, my opinion is that yes, costs are increasing. However, I feel that this is more a short-term issue than a long-term issue. This is mainly because UNH would be able to increase their prices in the future and sort of be profitable again. So for me, this higher healthcare costs, although it might affect the short-term profitability of the company, it shouldn't affect the long-term profitability as long as UNH increase their costs. The second main issue is the CEO departure of the company, and clearly the recent shooting of one of its executives. So whereas UNH currently what it needs most is stability, the departure of its CEO makes people more concerned, and therefore its share price dropped further. Is this a big issue? No, I don't think so, because I think market is overreacting to this CEO's departure, and the new CEO would most likely do as well as the old one. So for me, no concern on this second point as well. The third main issue, and what I think could be a potential issue, is the Medicare lawsuit. So quick Google will tell me that what is this Medicare situation. So basically what is happening, so a quick brief of this Medicare situation. Basically, UNH here is accused of submitting inflated patient diagnosis to the Medicare Advantage program. Alternative pays insurers more for sicker patients, and UNH, by making patients appear more ill, they could collect even more extra payments from the government. So this is the fraud that is going on. So in terms of the implications of this fraud, most likely there's going to be two outcomes. If UNH is deemed is deemed to have committed this fraud. So firstly, they'll have to pay a fine. For me, this again is not an issue because a fine is a one-off payment. It's short-term. The second more pressing concern, I would say, is that there would have to be some kind of restructuring. So UNH might need to change the way they are doing things, hire more workers in order so might need to hire more workers in order to improve oversight and enforcement, and this will lead to higher costs. So this for me is more of a concern. So now going back to that fair value that we calculated, we can see it's trading as on a 25% discount. Would I say that this extra cost as a result of this Medicare lawsuit would contribute to this 25%, is justified by this 25% discount? No, I would say not. I would say UNH is oversold, and the most I'll price in against an art, I would say, is 10% discount. So I feel $300 for UNH is very cheap. But would I put all my money into UNH currently? No. What I'll suggest is put 50% of allocated funds, or what you have allocated for this company. Buy it now at this price, 300. If it drops another 10-20%, buy another 50%. So that if in case, because short-term wise, you don't know what will happen, people might overreact again to the lawsuit. Let's say if they get a huge fine, it will drop further, and that's where you're going to buy more. But at this current point of time, I would say UNH is a buy. Thank you.